plant and machinery is 5%, furniture is 10%. So you write depreciation. First one is plant and machinery. So 10%, 5% is to be depreciated on plant and machinery. Now let's go to the question. Let's trade plant and machinery. Our plant and machinery is 4034. 4034. Now 4 is 0, 3. So that is 5% of 4034. It will give you 201.7. So you approximate it to nearest number, then this will be 202. That is that for plant and machinery. Then we have furniture, because we are told to depreciate 2. So the furniture is 10%. Furniture is 10% on furniture. Now let's go back to the question. Our furniture. Let's trace our furniture. Where our furniture is our furniture and fitting is 378. 378. Furniture and fittings. So that is a 3. If you divide this, you see that it is a 3.37.8. So approximately it will give you 38 at the end of the day. Now let's go back to the additional information. We have stock at close. So stock at close, that is the closing stock. That one is 8760. Then D said stationary owing. Remember that I told you the other time that any adjustment that has to do with owing, accrual and outstanding, it has to be added. So and while prepaid or advance is you subtract from that information that relates to it in the trial balance. Now we have a stationary owing. So stationary. Then let's look at the one in the trial balance. The one in trial balance is 7962. Now that of owing, that means the one in the trial balance additional information is 300. So you add owings. So that will be 2628. So that is what is going to your profit and loss account, while this one is going to balance sheet. So that is that on the owing. Then we have insurance paid in advance, amount to 40 naira. E. We also have advance. We have advance, that is the insurance. And you know what, when we talk about insurance, is advance is what you have paid and you have not enjoyed the benefit. So in the part of your account, it is an asset, while that of owing, it is a liability. That's why it must be under liability in the financial statement. Now advance, let's go back to the question. We have under your insurance, that is that one in the trial balance. We have 206, that is that of the trial balance. Then that of that of our additional information is 40 naira. So you less it. This is a 6, this is 6, and this is 1. So this is going to your P and L account, profit and loss account. The reason why we are doing this working is to ease us when we are preparing trading profit and loss account at the end of the year. Then we've done justice to F. Then the next is the owners withdrawn goods worth 1,500. So that of G is withdrawn. They withdrew good. And remember that relates to drawings. You know, I told you the other time that we have good drawings and the card drawing. Now let's go back to, let's look at our drawings here. We have drawings of 4,000. So you add another goods drawings. Goods withdrawn. So if you add another good withdrawn, that is 1,500. So the total drawings at the end of the day is 5,500. This is going to balance sheet. While this 1,1500 is going to trading account at the end of the day. Next we have income received in advance. Income receivable. Income receivable in advance. Now, how we are going to treat this is that let's look whether if we have any income receivable in the question. Income receivable. We have income receivable. That one in the and that is 48 naira. Then let's now go back to the question. Income receivable in advance. So that is 20 naira. So you less advance. That gives you 60. That gives you 68 naira. Then the last one but not the least, interest receivable. Interest is receivable in advance. This one is going to P&L. And let's look back to the question. Interest receivable. We have 48 naira. So that is 48 naira. Sorry, we made mistake here. This is 20. You less it, which is 28. So now let's look at the receivable we have here. We have receivable in advance. So receivable in advance. So that is then this is not advance, it is arrears. It's also saying this income receivable in advance. So this interest, this less. If I told you anything that has to do with advance has to be less. Why owings or arrears has to be you had arrears, you less any advance. Now you add arrears, and that is 10 naira. That gives you 58 58 naira. So 58 naira is what is going to P&L account at the end of the day. So having seen all this, we have debtor, we have this. Now these are advance, income received in advance. You know, reverse is the case here. Income, this is the income that was received in advance. That means you receive income from someone in advance. That means that person has paid, it has paid more than it's supposed to pay, and that is why this one is a liability to you. And this income, interest receivable in arrears, that is a current asset to you. That is why, because it is an arrear, somebody owe you interest, and you are still going to collect it. So it's a arrears at the end of the day. Now look at this. This one is an asset, because interest that you have paid in, because we have to be very careful when we are preparing this income and that of advance and owing. Now in the aspect of this advance, this one is it is an asset, because you have paid insurance, you have paid more than you supposed to pay insurance company. So that means you have not enjoyed this 40 naira. That means it is your current asset. Then this one is stationery that you have owed, that you have not paid, so it is your liability. That's why this one is going to current liability in your